Our current module is elements of financial statements. If you do recall, the classification of financial information as a first function of financial accounting, there we discussed that if the accountant will do a mistake in classifying correct financial information, that mistake will lead to a destructive financial statements or misleading financial analysis. So it is very important to correctly classify the financial information. So in this module, we are learning that what is the classification of financial information, which is in fact also known as elements of financial statements. So there are 5 classifications of financial information. Again, I'm repeating, these are the elements of financial statements as well. And if an accountant will commit a mistake in identifying financial information, such mistake will lead to a destructive or a wrong financial statements and misleading financial analysis. So the financial information is classified into 5 main heads. Number 1 is asset. Number 2 is liabilities. Number 3, owner's equity. Number 4, incomes. And number 5, expenses. We will discuss these 5 main heads point to point. All these 5 main heads, I repeat, are in fact the elements of financial statements. So the asset are the resources in control of the entity. By the way, what was your perception about asset? I tell you, mostly people wrongly have this understanding that asset is something in our ownership. It's wrong. Asset doesn't mean that you have ownership of that property. Rather, that property is in your control. You can have a very simple example of leasehold property. The property is not in your ownership, but since it is in your control, that is your asset. So over here, for your ease of understanding, keep these words in your mind, that asset are the resources. We have already discussed that resources are generated from the sources. So assets are the resources in control of the entity, and the important thing is that from which the entity is expecting a future inflow of economic benefits. So assets are the resources in control of the entity arising from past event through which there is a probable inflow of economic benefits in future. And liabilities are the present obligations of the entity for which there is a probability that the resources embodying economic benefits will flow out of the entity in future. So the entity on the reporting date has an obligation for outflowing resources in future. Owner's equity. It is in fact a source of finance that is representing owner's stake in the entity. Obviously, owner introduces capital in the entity and the entity generates profits for the owner. So these are the stakes of the owner in the entity. Incomes are in fact the earnings of the entity, whereas expenses are the costs incurred during a year or a period for which the benefits have been obtained. So these are the 5 elements of financial statements, or also known as main heads of accounting. In a way, these are the 5 heads in which financial information is classified. And all these financial information which are classified into 5 main heads, you can see in the first row as main heading: asset, liability, owner's equity, incomes and expenses. The subheads which are written under these main headings are its accounting heads. So here you will have clarity that what are the accounting heads and what is its relationship with the main head of accounts. So the important tips to remember are: number 1, there are 5 main heads of accounts: assets, liabilities, owner's equity, income and expenses. Assets are resources in control of the entity, and liabilities are present obligation of the entity. And present obligation means, this is very important tip to remember, present obligation means obligation of the entity at the end of reporting period. And the accounting heads are in fact the subheads of the 5 main heads of accounts. Thank you.